All that glitters is not gold, but today we are seeing some signs of life from the yellow precious metal. Today we are going to be talking about gold. If you take a look at this chart, you can see that it has spiked above 1830, which 1830 is a massive support and resistance line for gold. And so if we can hold above this line, it is a very good sign of strength in the precious metal going forward. Ready? Let's dive in. All right, so as we speak, gold is up about 1.5%, and we can see silver is up as well, almost 3% on the day. Yesterday, it closed about 2% higher. So we're seeing some massive strength out of silver. I didn't get the information on this, but apparently one of the drivers of silver's strength yesterday was due to a whale buyer probably out of Europe buying something about, $490 million worth of silver, something like that. Crazy amounts. But today we are seeing continued strength in precious metals. And now look, this is something, if we zoom out, everybody says, okay, yeah, it's up 2%, 3% today, big whoop. It's still down from its peak from that bubble there. Let's just zoom out for a second. Let's not even have it on a daily candle chart. Let's have it on a weekly chart here. What we can see here is a giant bull flag. That's all this is. When you have a massive, very quick run up and then a consolidation down and sideways, that is a bull flag. That is just a classic formation that you see on its way much higher. We also see here, now that we're zoomed out a little bit, that this $1,800 level, which was resistance in 2011, 2012 at gold's prior high. That's what we've been consolidating around here. So we've been building energy, lots of consolidation around the old all-time highs. That is a good sign. That is something that you want to see in a healthy chart formation. I know we're talking technicals here, and a lot of people don't like to look at charts, but that's what we're looking at here today, because it basically, what a chart is, technical analysis, it's just a visual representation of group behavior, of patterns that emerge naturally. That's all it is. And so we're just taking a look at what's going on visually from the buying and selling of a particular asset, in this case gold. We can also see here that the highs have been getting lower since its high in August. The lows have been getting higher since its low in August of 2021. So what it looks like here is the bear market in gold lasted from August of 2020 through August of 2021, almost exactly to the day, 1 year here, the 7th of August of 2020. I believe that was the 9th of August, 2021 over here. Yep, the 9th of August, 2021. Looks like that was the bottom in gold. And so 1 year bear market, and we've been on an uptrend since then. Now you can see here, this purple line that I have is at 1830. And 1830 here is a very significant support and resistance line. It was support back here at the end of 2020, beginning of 2021. And really, it's been acting as strong resistance since July of 2021. So over 6 months now, strong resistance. We had a false breakout here where we retested the downtrend, the upper downtrend line here. So here's what I would expect out of this. I've been saying for a while that the low was in November, when the Federal Reserve announced the taper would start. We briefly dipped below that in December, when the Federal Reserve quickened the pace of their announced taper. But really, the lows were back here in March of 2021, tested again in August of 2021. We've been making higher lows since. What I would expect is we stay within this channel for a little while, and we probably end up really breaking out of it in April, right here of this year. And so I would expect that within the next couple of days, we come up and we test this upper trend line here, and then we fall back down, and we, the price action gets squeezed into the end of this channel here. It's possible that we break out and continue our bull market from here sooner than April or May of this year, but it would not be surprising at all to see this sideways action continue, to see this break above 1830 here, just just be a false breakout, come back down below, and we continue to move sideways until we can't move sideways anymore and we really break out for good closer to April or May of this year. Again, it's possible that we break out sooner, but I wouldn't be surprised either way. Now, the reason why I think we're going to break out to the upside instead of the downside is because of, what I said earlier, which is when in doubt, zoom out. Let's look at a monthly chart here, and we can see this is, very clearly here. We can see this is a big bull flag, and we can see that it's turned around here. And so this is a very bullish formation, not to mention everything going on with monetary policy right now. This is a visual representation of pattern behavior that's emerged as a result of the fundamentals, which right now everything is one trade. It goes inversely or positively correlated to what the Federal Reserve does. Everything is one trade based off of what happens to the money. And what we see with gold is that it ran up in anticipation of the expected easy monetary policy, and then it started moving down on the expectation that the Federal Reserve would have to tighten and taper. So it moved up in anticipation of inflation, then it started moving down in anticipation of deflation, and then once the deflationary policy started, it started moving back up, where everybody's now, the fear is, hey, it's gonna cause a crash and they're gonna have to return to easy monetary policy at some point. And interest rates have been skyrocketing. Let's move back to a daily chart here so you can see this. The 2-year, absolutely. Let's zoom out here so you can see this a little bit more clearly. The 2-year has been just on a tear since gold bottomed August of 2021. The 2-year has been heading basically up the entire time. The 10-year has been moving up, although there's been more volatility. The 20-year as well, the 30-year as well. And so interest rates are on the rise. The 10-year will probably get to just under 2% here, probably 1.95% before it tops out here. That's a major resistance point there. And so interest rates have been moving up. And despite interest rates moving up, we've seen gold continue its uptrend, its new uptrend. And so I think we're going to look back at this and realize, hey, this bear market in gold only lasted a year, and August of 2021 marked the low, and that's when the bull market resumed. Most people don't know that yet because it looks like it's been moving sideways because we don't have the benefit of hindsight yet, but ultimately I think we'll look back at this and this will be very clear. That was the beginning of the next phase of the bull market. Now, when I say next phase of the bull market, this is the exciting phase. Typically what happens in the long-term gold cycle is it makes a new high from a bubble, then it consolidates and moves sideways. Then it starts to move back up again and it retests the old high. In 2008, it retested the old high from 1980, but then it had to consolidate and it fell back down again, had a significant fall in price in 2008. Then it slowly comes back up and finally breaks above and goes into a bubble phase, a new bubble phase where we saw in 2011. So 2011 here, that is the same thing that we saw in 1980, the top of the bubble, 2011, 1980. What we saw after that was move sideways and fall down, consolidate, move sideways, fall down, consolidate. And then in 2000 through 2008, we had a slow move back up. In 2018 through 2020, we had a slow move back up where we eventually retest those old highs. Right here, we're retesting the old highs. And then as consolidation sideways and fall down in price, little bear market, while we retest that old high and build a new support level at that old high. Same thing going on here. And then we'll break out and we'll get to a new bubble phase, part of the bull market, that last final phase of the bull market going into a new bubble here. Obviously, what's happening here is much quicker than 1980 through 2011. But that's how things go, especially with technology and with the acceleration, the exponential impact of monetary policy. That's what you would expect. You expect these things to move faster, just like the S&P 500. The crash after the dot-com bubble burst and then the recovery was much longer than the crash after the financial crisis and recovery. And that was much longer than the crash in 2020 and subsequent recovery. And so these things tend to move faster when you have the exponential reaction from policymakers, where they print a lot more money, lower interest rates, do a lot more exponential stimulus and easing, and then you also have technology changes as well, which help with reaction times from most money that can get in and out of assets, and reaction to news and things like that. So that's what I'm watching with gold here, and the fact that we are now breaking above 1830 is a good sign. I would want to see us hold very strongly before I'd be confident that this is, we're really going to break out and start this next massive phase of the bull market, because otherwise we have probably a couple more months of sideways action, price action, as we consolidate into the final part of this triangle here before we really get going on the rest, that new phase of the bull market. As always, really appreciate you guys. Thank you for watching. And if you are interested in all of the different resources that I recommend, use, or have on buying gold, I've got a guide. I've got some affiliate links for services that I like and use in the description below. As always, really appreciate you guys. Thanks for watching. Have a great day.